Welcome to another episode of Whiskey and Wealth. Today we're going to talk about, can you buy an index? Let's get started. Last time we talked about what a stock index actually is. Today we're going to talk about, can you buy that index or put an index into your portfolio? Now the short answer is no, you can't technically purchase an index to put it in your portfolio. And remember, an index is made up of many different companies, like as we mentioned before, the Dow, the NASDAQ, or the S&P. It's just a basket of companies. However, you can get access to an index through mutual funds or ETFs, which are exchange traded funds. And these ETFs or mutual funds basically have the exact same holdings as the index. So they hold the same companies as what the index is tracking. Therefore, you are able to gain exposure or mirror an index within your portfolio. Now, one thing to look at before you invest in an index fund or a fund that tracks an index is the expense ratio. With today's technology and access to trading, you can get index funds that track various indexes such as the Dow, NASDAQ, or S&P for very, very cheap. Meaning 5 or 10 basis points, that means 0.05 or 0.1%. So very cheap to actually hold an index or hold an index fund rather that tracks an index. So if your current portfolio has index funds or funds that have the same investments as an index, you may want to take a look, and if you're paying 50 to 100 basis points, meaning 0.5 or 1% plus to hold that fund, there can be a lot of opportunity to cut costs and get an equivalent fund that does the exact same thing. So that just goes back to things that we can control. We can't control the markets, but we can control the funds that we hold and the expense ratios involved with those funds. To wrap up, the answer is yes. You can actually get exposure to different indexes within your portfolio. And that includes foreign markets as well, not just Dow, NASDAQ, and S&P that I've recently touched on. And this is also known as something called passive investing. So you're not trying to time the markets with these type of investments. They're passive investments and they're built for the long term to give you exposure to an index so you can capture market returns.